So welcome to today's podcast. Thanks for joining us today. Again, I appreciate you guys as audience members and hopefully getting a lot of value and education out of these podcasts. We're trying to bring you new topics, new things for you just to get educated so you can see if it would be a good help for you in your wealth building sort of journey. So today I have a special guest today, Scott Phillips. He's the founder of SDP. I think I know what that stands for. Personalized Planning, and the Director of Alternative Investments and Tax Mitigation. I really appreciate his insights and experience, so I wanted to bring him on for you guys to learn about. So Scott, welcome to the Perennial Pride podcast.
Thank you. And it stands for synergistic, dynamic, and prioritize. Yes, it is my initials, but it does stand for synergistic, dynamic, and prioritize.
It's good. I like that. You kind of beat me in the fun. So great. So listen, Scott, I appreciate you joining me. You've got a lot of unique experience I wanted you to sort of share with my audience here. But before we get too deep into anything financial, share our listeners a little bit about yourself, your sort of journey through your career and sort of your financial life.
Yeah. My story is June 11th, 2001. I had a bad bicycle accident. Spent 2 weeks in the hospital. It gave me an opportunity to reflect on what's most important to me. With that, I decided I owned 3 Arby's restaurants and 2 convenience stores. I sold those and devoted my full time and energy and effort toward helping people make smart decisions about their money. And that's what I enjoy. During that period of time, I was working 80 hours a week when I had the 3 Arby's restaurants and 2 convenience stores. It gave me an opportunity to say, what gives me satisfaction? Now, what can I do to benefit others? Because I remember in working as a owner, operator of Arby's restaurants, that so many times I saw people being so concerned about their taxes that they had difficulty in running their businesses. My number one concern when I was running those businesses was, what can I do to reduce my taxes?
Interesting. So from that, I assume within your world, like you were kind of maybe experimenting, doing some things for yourself, right? In terms of your own wealth, like what was kind of your entry point to kind of helping solve that issue for yourself?
It's interesting. I actually, back in the late 80s and early 90s, I've always been fascinated with tax strategies. I owned and didn't hire the person to operate. I drilled 2 wells in West Virginia and Ohio. And with that, it gave me an opportunity to understand the oil and gas business. During that period of time, there was tax incentives for individuals to drill for oil and gas. And the incentives were substantial. Just like today, there's incentives to incentivize people to drill for oil and gas. With that, I saw the tax benefits. During that period of time, during the Reagan administration, they gave tax credits and they gave deductions for drilling, and all of the income was tax free. So I raised about $1 million, 2 wells, $500,000 each, drilled the wells. They were successful wells. They generated 10 to 12% income. That was all tax free. The drilling expense was all tax deductible. It was a tax credit, so it had incentive. So I've always been looking for ways. When I started providing financial advice, I did emphasize, what can I make sure that I ask the question, if I were to give you 8% or 6%, which would you rather have? I'm asking that question to you, Tom.
I want 8% or 6%?
Yes.
I would take 8.
Okay. I didn't tell you that the 6% was tax-free. The 8% is taxable. So it makes sense to understand, what about the consequences of your decision? What can I do to make sure that I have more tax-favored investments and I take advantage of the tax code? And that's what oil and gas will do. So I've been a compliance officer. I understand oil and gas because of my experience in drilling wells in the late 80s and early 90s. I've been a compliance officer that looks specifically at oil and gas programs. I probably look at 1 or 2 oil and gas programs a month. and I know what to look for. I know the operators. I go down and look at the facility. I remember back visiting a site a few years ago and went to the site. We were doing our due diligence meeting with an oil and gas program, went to his offices and saw that he had a mahogany wainscoting. He had an Armani suit on. He'd pulled up in a Maserati, and I said, "Whoa." I told my other cohort that was a compliance officer with me, I said, "We want to stay away from these guys. They're more concerned about show than they are providing for the investor." So the companies that I represent, I feel very comfortable with, and I've been working with them. One company I've been working with about 20 years, and the other company I've been working with for about 10 to 11 years. So
Interesting.
track record is very important in the oil and gas business.
So let's peel it back for a second, because I think it's really important to kind of understand this a bit, because, here you are operating as a business owner, convenience stores, right? So that was before you got into the areas of oil and gas. Is that correct?
About the same time. I got into oil and gas a little bit before that. I've been providing financial advice for over 30 years. So I always had a tack towards interest of net income, net tax-free or tax-favored income. My background is I was a pharmaceutical rep out of college, and then I also developed mobile home parks for a dealer network. So I understand the real estate business. I understand how they were working. So I do have a background that I enjoy tax-favored investing.
Yeah. No, and me, I am definitely a proponent of it. I think, I do believe to be patriotic is actually paying the least amount of taxes that are legally allowed in our world, right? Because you're probably doing something to help the economy, right? From a tax incentive perspective. So just like you're saying, our energy or housing, I think they're all just kind of incentives. So actually it's patriotic to take them, because you're helping this economy do what, the government wants us to do, right? In terms of these sort of incentives. So what did you learn in your role in the compliance arm and in the oil and gas, kind of more at the sort of ground level? It's almost like you were doing real estate, like, managing and owning property, but you're doing it yourself in the oil and gas space. Like, what did you learn from that sort of you brought forward with you?
What I learned was, just like oil and gas and any investments, whether that's stocks or bonds or real estate, most everything goes in cycles. And there's no one investment that will always be the best. So part of our strategy that Tom and I are compatriots of and believes is that planning is important. Finding assets that no matter what happens in the economy, you can still benefit from. If you remember back in 2022, the stock market had some substantial losses. The stocks and bonds took hits anywhere from 20 to 50%, depending upon the industry that you work in the stock market. However, oil and gas had a 50% return in 2022. So to me, it makes sense to see if in your portfolio and in your investment strategies, take advantage of the tax code, like getting a potential deduction for your investment and receiving a portion of your return being tax favored. So just as Tom said, people say loopholes. They're not loopholes. They're incentives, as Tom said, of what Congress has done to incentivize people to invest in things that they think individual investors and businesses can do better than the government. And I believe that the government can't necessarily do everything better than we as individuals can do and businesses can do.
They definitely do not have the capability to run profitable businesses, and unless you equate that to just running up trillions of dollars in debt and spending, they're just in the business of helping they're not really producing anything of any sort. So they need the private markets and public markets to help it with that. So, with that said, and I've had some experience personally with oil and gas, and, I've always I shared with folks and said, don't let the tax tail wag the dog type of thing. You've still got to understand the types of investments. And that's why it's so, interesting, your experience, getting hands on to develop, and drill for oil and gas. And it's kind of led you down the path of kind of evaluating some of these bigger operations and know what to look for, which I think is key for a lot of folks, as they're exploring like this potentially new space, right? Because most folks don't even know they could invest in oil and gas as a partner in some shape or form. It's just not something people are used to kind of coming across.
That's correct. And I'm of the philosophy and that no more, even though it has potential to be a great investment, depending upon the client's situation, whether that be a business owner or an individual that's on W-2 income. And we believe that no more than 10% of your net worth, exclusive of your home, ought to be invested in oil and gas. So it's part of a strategy, an overall strategy. Working with Tom and Elite Resources will allow us to make sure that you're making smarter decisions about your money.
Right. Yeah, that's a really important point. And I think you hit the home. I think that sort of philosophy around just broader diversification. I mean, I think this just as well as I do, Scott. Like, when people think of diversification, they're just thinking maybe their stock portfolio. Am I invested in international versus U.S. growth and income? That's diversification. But obviously, we're thinking much broader and more holistic around people's financial lives to account for other assets, their business, real estate, oil and gas, et cetera, into the mix. That's, to me, truer diversification.
Yeah.
So
it's interesting because I remember we've done a lot of workshops at a local university here. And a person said, I've diversified. Okay, tell me about that. He says, yeah, I have a 6-month, I have a 1 year, I have a 3-year and a 5-year CDs. I have diversification. Said, tell him it is important to look at, nobody knows when things are going to occur. If we look at 2022, the stock market was down. 2008 and 2009, real estate, depending upon where you're located, had up to a 50% reduction in their values. So that's why I believe that looking at oil and gas as part of your portfolio may be appropriate, depending upon your situation.
Yeah, absolutely. This part for some people maybe not experiences is kind of maybe the first sort of time you've ever heard of it. And so your education journey is starting. So, Scott, from all your experience, obviously from doing yourself and obviously working with large operators, we'll talk a little bit more about that in a moment. Tell us, tell us a little bit more about, some of the specific tax benefits, because there are definitely tax benefits to it. And, I think even for some tax professionals, they may misunderstand it. So this is not tax advice, right? It's all your professional, but, Scott, share some of your thoughts around the potential tax benefits of investing in, oil and gas as a limited partner or a general partner.
You can, depending on, so let's just take an example of $100,000. A person put in $100,000 into an oil and gas drilling program. The first year deduction typically will be anywhere from 75% to 95%. So that means you put $100,000, $75,000 would come off of your income. If you made if you put $100,000 investment, that would reduce your income by $75,000 up to $95,000. So that's the first year benefit of a participating in an oil and gas drilling program. And then the income that's coming in, and it would be tax favored. 20 to 45% of the income would be tax favored. So to give you an example, certainly figures are not guaranteed, but this is just an example of what happened in a program that we did in 2023, closed in December of 2023. And they pay a quarterly distribution, and in the first 6 months, the distribution was about 13.5%, while only about 29% of the wells were actually drilled. So that is one example of what they've done. During 2022, when oil and gas had a 50 to 55% increase in values. The returns, exclusive of the tax benefits, were in excess of 70%. Certainly those figures are not guaranteed. I've seen numbers that are lower than that. Typically, they have a preferential return. So they are saying that they expect to have a 20% annualized return for the first 5 years, that you'll get all your cash back exclusive of your tax benefits in the first 5 years.
That's good. No, that's helpful. And, I know this may be so blatantly obvious, but just want to share, why would they give tax benefits like this to investors? Right. It seems maybe so bad, but obviously there's incentive, right? But why would they give such good breaks with this?
President, it incentivizes more capital into the system, just like the current administration decided to take all their oil reserves. And they took all the oil reserves, so that now they deplete, thinking that's going to drive the price of oil down. Well, it did. And then also, those of you who may have been around during the 70s and 80s, there was an oil shortage. The U.S. was only producing about 20 to 25% of its own oil and gas needs. Now it produces more than 51%, and they're now exporting oil and gas. So that giving incentives to people to drill will help potentially reduce price of oil and gas, because now they're incentivized by the tax benefits and the income tax reduction of money that's being generated from the oil and gas production.
Yeah, that makes sense. And just honestly, a lot of these are, wrapped in a business, right? And just like businesses have risks, right? They may not succeed. So, this is a way to help sort of partner in a sense with the IRS to take on these endeavors in support of, our economy and our country and, energy independence in the way you described it, right? And, in the end, it hopefully drives more revenues for them too. There's a book that, I plug here too. And Scott, I don't know if you've read it, the Tom Wheelwright book, The 7 Investments the Government Will Pay You to Make. A fascinating book. But obviously the government is, for all the things people say about them, they're not all dummies. There's a lot of smart people there, smart economists. So, some of the things they do are meant to obviously produce some more revenues too for the country and obviously put us in a stronger position, certainly for energy independence. Okay, cool. So, for the tax benefits, that's great. And, obviously with investments, what I always encourage folks to really understand what they're getting into, like in terms of the risk aspects of them. So, when you think about this sort of space, like what do you see are the major risks and kind of how has that shaped your thinking around how you personally invest or advise others about this investment?
Yes, the technology today is much better than it was 5 or 10 years ago. It used to be that it would cost $35 to $40 to the cost to drill for a barrel of oil. It was today's technology and the methods of which they fracking has a bad terminology, but they've increased and enhanced the access to oil and gas. So now it costs $18 to $20 to drill for a barrel of oil. So it's much more cost effective to drill for a barrel of oil. So the fracking now used to be strictly a vertical. They just drill down and it's go into the shale. They put the fluid down there is typically just water, and then that would expand the shale to allow them to pull more oil and gas out of that. Now they do a horizontal drilling, and that horizontal drilling, it's really almost a question of not having a dry well, but how much oil and gas you're going to get. So these drilling programs are what's called, there's developmental and there's experimental. And the experimental is strictly, you don't know if there's proven reserves. It's hope there's reserves. And that's the old days of the Gettys. They were called wildcatters because they didn't know if there was oil and gas, but they were hoping there was going to be. Now it's developmental. They know that there's oil and gas, but they just don't know how much.
Mm.
So in the 10 years and then actually the 20 years that I've been with the two oil companies, in the last 10 years, they've not had any dry wells, meaning they've not had any wells that have not produced oil or gas for production. So yes, there's always a possibility that you're going to have a dry well, but based upon the current technology that they continue to improve, highly unlikely that there's a dry well. The question becomes how much and how quickly you can get a payoff or get your money back.
Okay. Yeah, that makes sense. It helps it de-risk it, right? I mean, I probably date myself a little bit. I still remember the first time I ever got exposed to oil. And oil was that old show, the Beverly Hillbillies. They struck oil,
Sure.
and now it becomes black gold type of thing. And so, yeah, that was just pure luck and speculation. But obviously, with the advancement of technologies and knowledge, they can obviously reduce the risk of failure, and sort of hopefully produce higher expectations around returns, at least to get your money back, right? At least, right?
Right. And so
So
one of the things that many times I get asked, when is it appropriate to invest in oil and gas? You look at your portfolio, look at where you are, what your tax situation may be. As Tom said, we don't want the tail to wag the dog, but it's something that may be appropriate in certain circumstances. So it would be appropriate for oil and gas for the person to look at would be when high W-2 income, because there are limited on the things that you can do when you have W-2 income to offset bonuses, stock options. It may be appropriate for a sale of a business, Roth conversions. Today's tax bracket, we know that tax brackets are going to be going up when things sunset in 2026, at the end of 2026. Taxes are going to go up. So it may be appropriate to do Roth conversions now when you know what the tax is.
mhm.
The tax that you would have if you did a Roth conversion, we find that out, but maybe you can tell me what you're running into, Tom. We run into people when we see at least 80% of their assets are tax deferred and they're taxable when they take them out. What are you running into, Tom, when you have clients that you're
Yeah, I think there's a natural tendency, especially for successful families who are making higher incomes. The strategy is deferral, and this kind of harks back to the diversification sort of philosophy. It's also tax diversification, right? So we want assets and some level of diversification, but unfortunately, we're seeing a lot where the bulk of people's assets are either in deferred accounts that are subject to tax someday that we don't know. And so it's creating a big sort of risk factor going forward, given that uncertainty. So yeah, we're seeing a lot of that happen, especially for our successful clients.
That's right. That's right. So I think it's something that might make sense depending on the individual. I had a client the other day that wanted to do it. I wanted to participate. We looked at his taxes. We looked at his other investments, looked at what his future income was going to be. And we said, we don't think it's going to be appropriate in your situation currently. So that would be something to get into more detail depending on the client specific situation. So those with the change in RMD at age 73 and age 75, this can offset RMD requirements currently and in the future, stock options, and a big offset is QBI, qualified business income. If you get below a certain level of income, your maximum tax is 20%. So we've been able to do it for some doctor clients, get them below the QBI limit so that that income is now 20%. So that's a big tax savings if they're 37 or 39 or even 40. And California is now 14.4% tax rate. So it's high. Now, Tom, where are you located? In Connecticut. I think you're in the close to double digit, aren't you?
Yeah, it's in the high single digits for sure.
Okay. So there's something to look at and it's something to review.
No, absolutely. So, some of the other things that I'd love your thoughts on too. I mean, obviously understanding who the operators, and that's just part of due diligence, right? That everyone needs to be doing with their investments. Also, for what I have often heard too around this is, there's so many alternative energy sources. Isn't like oil kind of going away and natural gas going away? Or what are your thoughts around that and sort of the kind of reality of things today?
So many people think that oil and gas is strictly for transportation, and that's not true. Two things. First off, almost a lot of products require petroleum in order to be manufactured. And so that's one thing. You're going away and diversifying, becoming to green energy. But we also, as I said, we're about 51 or 52% producing of what our current needs are. If we can get that percentage up, we don't have to rely on OPEC. We can produce it internally. We're
Mm.
now exporting oil and gas. And so it's a worldwide economy, and it will allow, even with alternative energy, solar power, wind energy, there's still, it will be an ongoing need. I hear this all the time that, well, it's going to go away. Hey, I don't believe it's going to go away. Just like real estate's not going to go away, but you do need to have some diversification, because when you do need to start taking money out of those investments, as much of those investments are down, it's not a good time to start taking money out of them or selling.
Absolutely. And to your point, the cycles, and there are potentially some listeners here on the younger end, so they really haven't seen anything but goodness in the cycles. And we've been in the longest, obviously, bull market for, known in history. And we'll see how long, this lasts. But, we go through cycles, and who knows how commodities will look kind of going forward. But certainly there's many who are projecting that we are in, approaching the bottom and going into a super cycle soon enough. So who knows for sure. But, this is why you diversify. The last thing I want to ask you too, which I think is top of mind for folks who are maybe even considering this, because, we want to look at the financials and make sure it makes sense and fits our kind of profile, risk profile. But, obviously there's always concern around, environmental potential impacts. Can you share a little bit more about kind of that end of it too, and kind of what's happening in the industry and what they're doing to kind of, make sure that they aren't impacting the environment as much as maybe people understand?
Well, that's the thing. Many people, this is like the natural gas. It's really clean energy. It burns off, and it burns off clean. So there's things that they're doing on a regular basis. They're aware they live in this same environment that we live in. So they're always looking for ways in which to improve and enhance the environment, make sure that it's cleaner. It's not likely, as I said, these two entities that we work with have raised over billions, have raised billions of dollars. In fact, one entity that I worked with this summer, they raised $185 million in 4 weeks, because they're concerned about the environment, and they know that you continually need to careful and concerned about what fracking does, what it doesn't do, how you get it out, how it gets into the environment, and to protect our lands.
No, that's great. It's great. So, we covered a lot of ground around, his background and sort of this, this is meant to give, folks just the primer to see, get a little bit more educated about this potential investment. So, Scott, anything you'd want to share with my audience that we haven't covered so far around for folks who are learning and maybe thinking about this as something to potentially add to their investment portfolios?
Yes. Well, first off, you need to spend the time to look at where you are, where you want to be. What is your tax situation? Oil and gas is not appropriate for everybody, but I think it's something appropriate to look at, because it may be suitable for you depending upon your philosophy, depending upon your tax situation, depending on your income now and in the future, and by diversifying your portfolio on an asset that's non-correlated, meaning an asset, oil and gas is an asset that doesn't work like the normal equity market or real estate. It works differently. So if other markets are down, oil and gas may be up. That's something that is worth, I think, the time to look at it in more detail. But it's not just a superficial look. You need to look at it with your CPA to see if it might be appropriate and with Tom.
That's great. Thank you for sharing that. And Scott, I really appreciate you spending time with me and educating my audience around this. It's, I think education is empowering, and it hopefully helps people to, learn things that could potentially help them. And, prior to getting on this call, I really appreciate you sharing more about you, and that, you could be retired, but you're not, because you still are serving a purpose on this earth and helping educate people around how to maximize their wealth and live a better life. And to me, then why would you ever retire? And so it was really great to hear that.
As I tell people, I am retired. I do what I want to do, when I want to do it, with whom I want to do it. It's a pleasure working with you, Tom, today.
Yeah.
Look forward to hearing with some people that might have further questions about whether or not oil and gas is appropriate for them.
Absolutely. So on that note too, as we kind of conclude this episode, how best to maybe learn more about some of the things that you're doing, or get in contact with you with maybe additional resources to help with their educational journey? How best to reach out to you?
We have a website. It's Scott at SDP Utah Advisors. So that's SDP UTAH Advisors, ADVISRS.com. And you can look at our website and see what resources we have available, as well as a phone number, and we can give you further information. Phone number is it's located in Mountain Time. It's 801-363-8800.
Wonderful. Thank you, Scott. I appreciate you. Really enjoy getting to know you, and you got a lot of wealth of knowledge. And, here we are chatting and helping people get educated and empowering them to live the life they actually want. So thanks again, Scott, for your time, and we look forward to working with you.
Thank you very much, Tom. Great to see you today.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it, and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.